Hi traders, welcome to this Blueberry Markets video update with me, John Kibler, Senior Market Analyst. In this video, I'm going to be taking you through pound, as that pound weakness has seemed to persist across the board at the moment, and it looks like it could potentially get worse with coming data. So we're going to take a look at the pound. Pound was something that we looked at in the week ahead analysis video as well, and we were really interested to see how the pound would develop this week. And there's been some kind of interesting developments as well that I just want to take you through. So let's look at the news first. We obviously had some key data out this morning. It was the claimant count change, dropping from 7.3k to 0.9k, which is actually a good thing. If we just open the detail up here, the reason why it is actually a good thing, and the notes are here so you can actually see here, it's the first indication of the employment situation released a month earlier than the unemployment rate. So essentially what this is telling us, although that it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health, because consumer spending is highly correlated with the labour market conditions, which we know already. But essentially, you can see that it has come in at 0.9k. That is relatively good. It was forecast to come in at 17.1. But you can actually see that obviously that drop there was actually quite good. However, the pound reacted bearish to this data. Now, it could have been acting bearish because of the fact that the Bank of England governor recently talked about the potential for interest rates to be at a peak now in the UK, and this type of information here suggests that if there is less unemployment, essentially that the problem that persists in the UK is the wage growth and the persistent wages that are really affecting the fact of consumer spending. So there could be an issue here where the UK or the Bank of England may still have to hike again. And that's something we have discussed previously, especially in our live streams. But you can see here the GDP data coming out tomorrow at 7 a.m. British Standard Time is meant to drop from 0.5% to minus 0.2%. So that in general is pretty poor data, and that could also fuel a little bit of this pound US dollar downside that we're seeing. The pound across the board is a little bit weak, and that's something I want us to take a look at. So let's go dive in to some pound charts. I'm actually going to start on pound US dollar, because cable was one that we highlighted in the week ahead analysis video. We jumped up to our weekly chart. We said this is a nice strong weekly close. We've actually just opened this out as well, and I'll just zoom in a little bit. You can see that we had a really good strong weekly close here, nice bearish close. So we were looking at areas of support and resistance. We were closed below the 1 spot 2650 handle. We've also got the lows here at the 1 spot 2350, which could be targets for traders. And we could see this downside momentum potentially continuing. If we go to the daily chart, Monday's daily candlestick was actually a bit of an indication that we could see some downside as well, because although we did see buying into that Monday, we closed back below Friday's close. So there's an indication there that the buyers weren't strong enough to push us through Friday's close, Friday's high, I should say, sorry. And we haven't been able to close above that. So that's another sort of technical sign that maybe the buying momentum here isn't as strong as what people may have expected from that day. A lot of people probably would have seen this kind of candlestick shape here and suggest that maybe price is actually going to continue back to the upside. However, because of the underlying issues with the pound, that weakness was likely to stay. Now, if we look at the 4-hour time frame, this is really where you start to see the sort of bearishness coming back into the market. We traded up to the 1 spot 25 sort of 50 area, 25.40. We rejected in here today, and you can see from the stochastic as well that price has come back below that 80, and we're starting to drive a little bit lower in here. In fact, let me just change the color of that so you can see that a little bit better. I'm just going to change that to bright yellow, and the red we will go with a white. Let's see if that comes up a little bit better. There you go. You can see that a little bit better now. So you can see the stochastic coming through the 80 there, that potentially pushing to the downside. We are approaching these lows at the moment, but I don't feel like that's going to be too much of a problem at this current moment in time. Now, traders might want to look for some opportunities to the downside. We did come up into this area here. You can also see a little bit of stochastic divergence where price formed a higher high, but the stochastic formed a lower high, and then price has since traded to the downside. So, like I said, there is some opportunities around, and I think if price was to come back up, maybe test the 50 moving average here, the 200 moving average, that could be also sort of an area of interest. Because if we look left, price has literally kind of rejected from this area in the past, and that's around about that 1.25 handle. So anything around there suggests to me that there could be a little bit more downside in the price of cable. That being said as well, Aussie's been fairly strong recently. So if we head over to pound Oz, we can see here on this weekly time frame, although price is pretty bullish from a weekly perspective, we are still kind of pushing lower. You can see the stochastic as well coming back through that 80 could be a sign of further downside. I do quite like the 1.90, 150 up to the 1.92 area on pound Aussie. That could be something to look out for. Daily chart, we're pressing to the downside as well. 4 hour matches that. We've just recently traded outside of a slight consolidation zone, which you can see just through here, and a rebound off that 50 MA. So there's potential for the market to continue to the downside here as well, because Aussie is a strong currency at the moment. So that's what I would be checking out if I was a pound trader at the moment. I'd be identifying these pound levels of support and resistance, especially against those stronger currencies. The dollar is technically still strong at the moment, and obviously the Australian dollar has been really strong recently. Positive data out of China has really helped that. So we're getting some pound Oz weakness here. That could be something to watch out for, as well as cable. Thanks for watching this video update. I really hope you enjoyed this video. If you did, leave it a thumbs up. Please subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you soon.